Hi, I'm Daniel LeBeau. Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today, I'll be talking about an opportunity in the crazy Spac market, and we've seen some huge gains as well as some huge losses in this specific space. But I think that I have found an under-the-radar opportunity in a company called Alight, and it is going through a merger with Foley Tresemme, which is run by William Foley, and he has had a great track record of buying out companies and creating amazing value. He's been a great manager for something like 4 decades at this point, with his one of his biggest companies that he's still a chairman of, Fidelity National Financials. Having thousands and thousands of percent returns since he originally took over the company. And he has done more than that. So Fidelity National Financials is a real estate investment firm, but he's done things in fintech, data analytics, and then now Alight is the opportunity that we're discussing today, with the Spac ticker being WPF. And Alight is a human capital management company based on cloud computing, and it's really undervalued based off of what the industry is setting for the standard, and a lot of the different metrics that we can look at when we dive into the stock. So let's look at the charts and take a look at some of its comparables and see how this stock is going to outperform in the coming weeks, months, and years ahead. So the first thing you want to look at when you look at a SPAC is their management team. This is the most important thing for understanding where the value is going to be created from. And you can see we've got some financial gurus here with tenured experience of more than 2 decades, with this whole team being run by Bill Foley, and he has had a great run in the financial markets with one of his first and greatest creations here, Fidelity National Financial, which is a REIT creating an enormous amount of value, growing from $3 million in 1984 to $11.7 billion today. And he continues to drive growth across the board in all different industries. And this latest SPAC with Alight, with the ticker WPF, like I said, is just another example of where this value creation is going to be seen next. And this is the opportunity that we've been looking for in the SPAC market. The markets aren't valuing this at the proper valuation. And you can see we're trading down to where we started this SPAC at back in last summer. And so the spike here was when the Alight merger was initially announced, and then we just kind of fell off, with the rest of tech having a little bit of weakness, and kind of investors losing interest in this company before the actual merger comes to fruition. So Alight, let's talk about Alight a little bit. Alight is being used by 70% of Fortune 100 companies, and just about 14% of the U.S. population is an Alight client, whether you know it or not. And not to mention, this company spreads across over 100 different countries. Its cloud solutions give businesses scalable software for growing operations to help them navigate the increasingly complex and expensive healthcare system. And that's really what their competitive advantage leans on, is that AI-driven cloud-based computing software that is going to help businesses enhance their human capital, as well as allow them to improve their ability to provide for their employees. So the company is transitioning to a cloud computing platform, and you can see it with this BPaaS, which stands for Business Process as a Service. And their bookings are just exploding from 37% in the last, I guess that was 2019 to 2020. Second halves of those years, and it only makes up 13% of the total revenue, but it's expected to make up 23% by 2023 and 50% plus in the years to come. And this is really the driver of the company right now, as cloud computing becomes increasingly attractive in this mobile world we're living in. This pandemic has pushed us to function remotely, and cloud computing is obviously an attractive offering for those reasons. And as we move into the hybrid world, I think that that's only going to increase. So looking at its revenue visibility and stability, you can see that their contracts last between 3 to 5 years, and they got revenue retention of 97%. And their average client tenure is over 15 years, essentially saying that clients don't leave Alight once they join this platform because of how attractive it is. And like I said, 70% of Fortune 100 companies are already using this software, and I only think that's going to increase as their transition into the BPaaS segment continues to expand. So comparing this company to some of its top competitors, Broadridge, ADP, Paychex, Health Equity, is trading at a sizable discount. And these companies are a little bit archaic. They're not really transitioning to the cloud like Alight is, and they're not showing the same revenue growth either. And you see Health Equity showing, the highest amount of top line growth out of all of its competitors, is trading at, double its EV to adjusted EBITDA value. And I think that just shows opportunity in this stock today. So let's take a look at the charts here and see where it's trading. I think they were giving this stock away at a price to sales based off of its Spac allocation of just about 2 times. And this is unbelievably low for a company expected to drive double-digit sales growth in the years to come. And I think this is a perfect opportunity to jump into this stock. We're hitting a level here, trading right about where we were when this Spac took off last July. And this spike here was a reflection of the merger and the excitement around that. And I just don't think this is on a lot of investors' radars. It's not as exciting as the CCIV's Lucid merger, Virgin Galactic, or any of the other parabolic stocks. And I think that's why it's remaining under the radar. We have a ton of SPACs in the market today. And once this merger, like I said, actually comes to fruition, hopefully in the first half of this year, the stock is just going to take off. And I think now is a good opportunity to jump in. Obviously, these SPACs are high risk, high reward. If this merger falls through, this stock could trickle down even further. But I am confident that Bill Foley will push this through and create value for the company like he has for so many other companies in the past. So don't miss out on this opportunity. We could still see WPF trickle down a little bit further from where it's at. Like I said, this is under investors' radars and under analysts' radars. And this is one of those SPACs in a pile, a haystack of SPACs. It's that one needle that we've been looking for. And I think this is a perfect opportunity to jump in, like I said. So don't forget to check out Zacks.com/promo for our latest promotion and get Tracy Reineck. Sign up for the waiting list to be in the Insider Traders portfolio, which provides you with all the insight of the insiders in the companies, which could provide value for your portfolio. So take a look at that, and look forward to speaking to you guys next time.